Hi, I'm Wei Min Tan. I'm a Manhattan, New York property agent, and I focus on investors buying Manhattan condos as an investment most of the time to rent out. And this is our July Manhattan property market update. The first slide, I like to share some examples of our clients' apartments. The one on the left here was purchased turnkey. It's a luxury condo in Tribeca. We bought it, closed on it, and rented it out right away. Turnkey meaning we didn't have to do anything to it. The one in the middle here is an ultra luxury loft style apartment that's in Soho, and the ceilings are really high, everything is really high end, the price was really high, and the rent is also very high, the rental income. The one on the right here is actually a 500 square feet terrace of our client's apartment that's in a pre-war condo. He bought it during the great financial crisis and then sold it a few years later for a good profit. Let's move on to the first slide. Manhattan condos second quarter 2021. These are the key stats. The first point to note is that number of sales, this one 1616, the sales volume increased dramatically versus last quarter, versus first quarter, went up 49% versus first quarter and 162% versus last year. Why? It's because of three factors. Number one is that the interest rates are at historical lows, but it has been low for the past 1 year or so, so that's not that big a deal. But number two is that there's a pent-up demand from last year, so buyers who were supposed to buy last year didn't buy, and everyone is buying this year. And number three is the market recovery. Right now 70% of New Yorkers have been vaccinated, the market has reopened, and most companies are having employees back at work 2 or 3 days a week, and it's going to be full time for most companies when September comes. So there's a lot of optimism, and that's why buyers are deciding that now is the time to get back into the market and take advantage of the very, very low interest rates. If you look at average price per square foot, it's at 1900 right now. It's higher than last quarter, but still a bit lower than last year. Months of supply shrunk. We have a supply shortage. Right now it's at 7.3 months, which is below the historical average, and it's 24% lower than last year and 54% lower. It's 24% lower than last quarter and 54% lower than last year. But the key point here is that the sales volume jumped up a lot because all the buyers are coming back. This is the historical price trend of Manhattan condos. You'll see that historically it goes up steadily. When there's a recession, it goes down for about 2 years, and then it goes up steadily again, and when there's a downturn, it flattens. So 2017 was the prior peak. 2017 to 2019 it was a soft market, these three bars here. And then 2020 COVID hit, and when COVID hit we had the bottom here in July of 2020, and Q1 it went down a lot because these reflect a lot of the COVID deals as well. It takes 3 months to close, so by the time they close in the first quarter, these reflect the deals that were struck maybe in October, November, or December of last year, still during the pandemic time. So these first quarter numbers do reflect the pandemic deals, and second quarter it shot back up again. So this is a reflection of the market recovery based on the points I mentioned earlier. Faster is better. This is a graph from Urban Dicks, and it shows the discount from the asking price, and it shows that properties that are priced well, that they have a contract signed in under 1 month. So the ones where the contracts are signed in under 1 month had 0% negotiability. The ones where the contract is signed when they are 1 to 2 months on the market, there's a 3.5% negotiability. and the ones that have been on the market for 6 months, it basically means that the sellers were asking unrealistic prices, so the discount when they eventually sell is actually a lot more. Here it's about 12%. But what was the COVID discount? The COVID discount last year was between 7 to 9%. And right now in the second quarter numbers, it's roughly about 3 to 5%. So the COVID discount has shrunk from 7 to 9% in the first quarter to between 3 to 5% in the second quarter. Why? Because the market has recovered a lot. This shows the pending sales. Pending sales are the contracts in the pipeline waiting to close. It's a point in time number. Notice that the bottom was around July. Then it's been increasing every week since July. And we're in record territories. And this reflects, I think, the last bar here reflects July 9th. It's been increasing every week. And this graph basically shows that there's a lot of demand, and supply has been shrinking. Supply peaked at around 9,000 back in October, November, and it has been going down. There's a slight uptick here, but it's been going down. So that's one of the challenges. We have had so many weeks, I think more than 9 weeks of 300 plus contracts signed per week. That's in record territory also. And why? Again, it's because of the optimism, it's because of the very low interest rates, and it's because the buyers are all buying. Now the buyers who were supposed to buy last year didn't buy last year, and everything got moved forward to this year. So that was a brief update, and this is a quick bio of myself. I focus on Manhattan condominiums. I'm an ex-city banker. I went to school at Illinois, live in Manhattan. Live in Manhattan. I've been in Manhattan since 1999. I speak several languages, and none of which is my first language. I'm from Malaysia, but anyway, that's off topic. And I do a lot of fitness stuff here. And thank you for watching.